Welcome back, Kryptonians, to the Chart Experts continuing coverage of Bitcoin and the crypto charts. This is going to be an exciting video. I can feel it already because we are going to take a deep dive into, well, you know what we do on this channel. We look at the story of the chart from the point of view of the whales. Okay, so that's what we specialize in. We don't simply want to just look at, oh, prices moved higher out of this trend line and so on, and I wonder what that means. No, we want to really deep dive and understand what's happening in that price action. What are the players doing inside that price action? And that's what sets this channel apart from everybody else, because you don't see this type of analysis occurring anywhere else. Okay. So I'm going to start right at the bottom of this wave here, so right at the bottom at 15.5k, and we're going to look at this from the lens, the point of view of the whales, to really understand what's happening. Okay, so bear with me. I know you love this type of analysis but yeah, I love doing it. Okay, anyway, so let's start at the beginning. Okay, before we continue, give this video a thumbs up, share it, subscribe, obviously join us on Patreon, support this channel on Patreon. We really appreciate your support and your input and your questions. So let's start right at the bottom here. So we saw this period of accumulation, and obviously these are the primary players in the market at this period of time. That the whales, they were accumulating here, as we said to you. That's the reason why we call this bottom at 15.5k, 16k, whatever it was. And we saw the accumulation occurring, and we were expecting this market to move higher. Okay, so that's where we were. We saw the other players, the smaller fish, be shaken out of the market here on various exchanges. This low was actually deeper than this low here. Okay, so that was great. We saw that as a great sign that the market is going to continue to move higher. Okay, so when the market did move higher, we saw that this particular either a C wave or third wave was actually weak. Okay, it was not extended. It didn't get even to the 1.618 extension. For that reason, also for the fact that there wasn't enough distribution occurring here in terms of time. We pointed out in previous videos, and we were expecting for this move here to either continue sideways and to eventually move down, to allow the ETFs to continue to accumulate this market. Okay, so that's what we were expecting. However, eventually what we did see is a move higher, and so now we're going to break down why this market likely moved higher, and hopefully it should be insightful. Okay, before we proceed, I would like to point out that the market players changed on January the 10th when ETFs entered the market in their droves. So you'll remember that that's when the category of players needed to be shuffled, okay, so to speak. So these prior whales, they were the big fish in the market, but here even bigger fish entered the market. So these are the new whales. They are the primary players now in the market. We look to them to move the market and to move the market in the ways that they want the market to move. Okay, along with obviously market makers. Okay, So these guys are, we have to now pay attention to what these guys are doing. And we know that they started accumulation around about January the 10th. And the low shortly thereafter was around about 38k. Okay, so we're watching that level very, very carefully from now onwards. Okay, and we were looking at this range here, the top of this range here. So just to give you a clearer picture, we were looking at all of this as a range. Okay, and this was the top of the range. We were looking for this market to sell off at the top of this range, and that would then feed into the ETF's need to buy. This is very important. We're not going to forget this. It doesn't matter what happens here. Yes, Bitcoin is at 100k. We can't forget this. Okay, it's just, we need to pay attention to what the whales are doing. This is very important to understand for our understanding of the market. Okay, I know most people just are not paying attention to this, but we are paying attention to this because we want to understand what's happening inside the market. Okay, so this ETF's needs to buy has not been satiated. Okay, this is the whales still need to buy, in our opinion. Okay, because there was very little distribution that occurred here. Okay, so the very little distribution means very little selling. So how did the ETFs satiate their need to buy? We do not believe that the over-the-counter buying that they are doing is enough. Okay, we believe that the market needs to feed the ETFs before any strong move higher can proceed. Okay, now part of that is also this wave structure here. That's also telling us that this need to buy will eventually be fulfilled, right? Because we've got, as I've mentioned previously, we've got a, and we'll just stay in this drawing mode. Okay, so we've got this wave 1 here, wave 2 there, wave 3 here, wave 4 there, and wave 5 there. Okay, okay, right. So if we look at this from an Elliott wave point of view, if this is a completed wave 5, and we've mentioned previously that we believe it is, we'd expect a move down into the wave 4 territory. Okay, now as you'll see from this chart here, we've got the lows of each month highlighted. Okay, so we've got the November low, the October low, the September low, the August low, and below each of these levels there's going to be sell stops. Selling will occur after each of these lows is breached, and the selling will most likely be bought by the ETFs who need to buy. Okay, so we've highlighted this because these lows are important to fulfill the narratives that the ETFs will need to finish their accumulation before the real bull market can proceed. So we're looking for a retracement to occur into these levels and into this level here, okay, to allow that to happen. So let's look at the retracement, how that would look like from the end of this wave here, and whether or not that actually fits into this wave structure and this highlighted accumulation level. Okay, so we've put that in, and as you can see, the 61.8% retracement level fits in beautifully at 49k, right? We'd expect that to be run. We'd expect 49k to be run, and obviously we've got this start of ETF accumulation level highlighted, so that would also mean that we'd expect the 70% level to be run. So 61.8%, which would be a typical wave 2 retracement. Okay, so we've got 5 completed waves, then the correction moving down into the 61.8% retracement level, and also down into that 70% retracement level. Okay, and that would fulfill the ETF's needs to buy. That would allow accumulation to have occurred. All of these stops will have been run, and the market will be primed and perfect, and able to move higher, because the biggest players in the market would then be in a position to put in sell orders at higher levels. Okay. Now I'm just going to get rid of these some of these guides here, because we're also going to be looking at the actual other players in the market, and how why price didn't move lower from 73k that we were expecting. We need to look at that as well, not simply the fact that, oh, a lot of this makes sense, but also as you know, we like to look at the players in the market. What are they doing, and why price is behaving as it is, or in this case, why it behaved as it did. Why didn't it move lower from 70k? Okay, so let's get rid of this here. And okay, right, so first thing is the fact that, well, let's not get rid of that box actually because we're going to need it. So first thing is, this was the top of the range, this was the previous high here. We were expecting for this market to move downwards, but it didn't, and I've been having a long, hard think about this. Why did the market not move lower from that point onwards, rather than from this higher level here? And it suddenly clicked to me, and then I thought I'd share this with you, because it's always good to have these insights. So at this level, we saw the market move higher, okay, and then we saw the selling start. Okay, so the selling did start, and at that point we'd expect for everyone to notice that the selling has started, right? So what would you think would have happened at that stage? Well, what would have happened is that sellers would come into the market, and more particularly traders that specialize in markets that are moving downwards. So for example, short sellers. Okay, so short sellers will have taken position at this level here, and they've got their positions require them to borrow money to sell the market, and to then buy back, right? When the market moves lower, they need to buy back. So when you think about that causes particular problems in this particular scenario. Okay, the scenario that we need to bear in mind is that short sellers will need to buy. Now, when the market does move lower, can you see the problem? Yeah. So short sellers are going to essentially buy back the market exactly when the ETFs need to buy. So now we have conflict. Okay, so they both need to buy. There's only so much supply, and the ETFs are the bigger players in the market, right? So obviously the market makers do not want that problem, right? So they don't want the shorts to be buying when they know that they've got lots of ETF buy orders here, right? So they had to take this the other way, right? Because it's going to cause a huge headache for them. Okay, so when it clicked, it was like, oh, it seems really obvious now. But so they took the market the other way, and that it alleviates the problem completely. Okay, because what happens then? What happens then is that those shorts were basically squeezed out. When price moved higher, those shorts had to cover. Okay, so they had to buy back the market. They had to close their shorts. Their stops were run. They had to buy back over here. And the market moved higher. So now when the market moved higher, we label this as shorts were taken out. They no longer have their short positions here, causing problems for the market makers. They've been taken out of the market. They had to buy back the market, so they were taken out. And also when price went up above 73k, we also had breakout buyers. Okay, so we've got a double whammy, a 2 times the amount of buying occurring. Okay, so we've got breakout buyers occurring because they like to buy breakouts, and that we also had shorts needing to cover their short positions, converting their short positions into basically closing their short position and then buying back. So we've got buying and more buying, and where will these breakout buyers like to sell the market? Well, they want to take it to the next logical step. If they are trading the market, then they will look to take profits at the next psychological level, which is 100k. Okay, but also we have to bear in mind that there were players here, the old whales, who we now call dolphins. Okay, so smaller fish, but we can't call them whales anymore because we've got ETFs. ETFs are the new whales. Remember that. So these guys here who didn't sell at enough they did take profits, but they didn't sell enough. Why? They were looking for higher prices. Okay, higher prices, i.e. 100k. Okay, we've seen a run of 100k, and we've seen price look like it's stalling at this level. Okay, so that's where we are at the moment. So we now understand why this market didn't sell off as we expected it to at 73k. We know that shorts have now been taken out of the market. Okay, so we can get rid of that. Okay, and now what we're expecting is for selling to start at 100k, right? So we'd expect these breakout buyers. Well, where are these stops? Obviously, you're looking at the breakout buyers. Breakout buyers will also have stops underneath that November level. Okay, so that's 66k. That's their, there'll be a lot of sell stops around there. Okay, where if the market were to reverse down, it first need to break through that 73k level, and then it would take out the stops at 66k. Okay, so what we're expecting to see is some type of red candle, okay, and that would give us our first indication that this market is likely to be headed lower. Okay, so that's what we're expecting to see eventually, is that the market moves back down to that 73k level. Now suppose we were wrong about the market, suppose we've read all of this wrong, okay, that would then present an opportunity for anybody who is feeling FOMO to basically load up on the market. So I've mentioned this previously, we don't mind being wrong in the market because we expect things like this to happen. So market moves higher, market then retests this level, okay, and provided that support holds, the market moves higher. Okay, so that's the reason why we have to keep our cool in these markets. But here we are expecting for these levels to give way, because we are keeping our eyes on the ETFs, and we believe that they have not had enough chance to accumulate the market, and markets do not move higher without the whales, right? So I hope this has been helpful to you. I hope it's helped you to understand the story that's unfolding inside these charts. I hope it's been insightful. I hope it's allowed you to look at the market not just in terms of, oh, it's price, it's moving higher, it's breaking through a line, all that basic sort of technical analysis where there is no story. Here we have to look at the story of the charts. We have to understand what's happening. Now we also have to be prepared to be wrong. So if the market does something else, we do not give up on the story, we simply understand the story, and that's what we've done here. I hope it's been helpful. If it has, please give the video a thumbs up, share it, subscribe. Hey, this is Asim at the Chart Experts, wishing you every success. Join us on Patreon. What are you waiting for? Till next time, bye bye.